All right. So Isabel is with Nathan Family Office. They've done over 300 venture capital investments. They've done over 100 real estate transactions. They own their own town in California. And I wanted to have her on stage for a few reasons. Part of it is just the interesting combination of real estate with venture capital, but also it's a trend I'm seeing that right now, the desire to invest into hard assets or profitable, cash flowing, operating businesses is really high. But at the same time, we've seen these trends, whether you like sports betting or cannabis or crypto, these are markets that have exploded in size and expanded so greatly, they created a lot of wealth. And so a lot of families realize that there's these big waves of change that come, and that perhaps maybe 1 or 2% of their portfolio should be allocated to some of these venture type activities and investment opportunities. And so I thought it'd be interesting just to have Isabel here and kind of explain their mentality, what you invest in, what you focus on. And I'll have her introduce herself further in just a second. But if anyone who is standing in the back would like to sit down, there's about one chair available at each of the tables. So if you do prefer to sit, then feel free to come up and grab a chair just so you don't have to stand if you don't want to be. But Isabel, what would you add about your bio and your background and your family office?
Well, first of all, before joining the family office, I was in real estate on the real estate brokerage side, where I ran my own business, but that was back over in Sweden. Then moving over to the U.S. about 6 years ago, now being with the family office for about 5 years, it's been an amazing opportunity to both continue on the real estate side, but also learn and grow with the venture capital side, which is something that we only got into about 5 or 6 years ago. So to grow along with the family office.
Right. So going from getting into venture capital 5 or 6 years ago to doing hundreds of investments, how did you get started? Who did you figure out who to trust in that area?
That's a very, very good question. First of all, finding the right partner, because it's really important that, we're coming from real estate, or we came from real estate. And that's not where our expertise was at, but we knew that we wanted to get into venture capital because it's way different, and we wanted to diversify our investments. So first of all, find the right partner with the domain expertise that we did not have. And first of all, you got to build that relationship over quite a long period of time. So this was not made in one day. It took us quite some time to get there.
Sure. I know some families that made their money like in manufacturing or industrials. When they look at tech and venture capital, they say, oh, well, maybe we'll invest in manufacturing tech and we can try the new device at our manufacturing facility and have extra expertise in that area. Is that the case with you? Do you do mostly real estate tech, or do you look at all types of tech?
All types of tech. And I think that we have also learned along the way, there are now industries that we tend to stay away from, because after taking a step back, looking at the portfolio, we see what we've been good at picking and where we've been less good at picking. So we just double down where we're, have the main expertise.
Sure, makes sense. For the wealth creation of the family office, like what was the main event or the turning point, or where did the wealth kind of come from originally?
So that came from the real estate side. So we're a single family office, and it's the first time generation money and local here in LA. So basically from real estate development, but I would say what, our pivot and our main, what has made a lot of difference for us is when we decided we were going to supplement our own capital with outside capital from other investors. And we came to this decision about 7 years ago. Before that, our head of the family office, Richard, always thought that it was easier and better to do all of the investments on our own. That's also when we decided that we were going to get into venture capital and started our VC firm, Expert Dojo, that we have now invested in 300 companies from. And most of these companies have raised follow-on capital from outside investors who are now our co-investors. And what that has allowed our initial investment to do is to grow already by 5 or 8x. So it looks like our real estate portfolio is not even going to be as good as our venture capital portfolio. So it's going to be outperformed, and our real estate portfolio is what allowed us to become a family office in the first place.
Right. Yeah. Interesting. So You see a lot of deal flow now. If somebody is looking to approach you or another $1 billion plus family office, what's the way to get your attention? One way, obviously, being here in the room is introduce themselves and then say something unique, perhaps. But if they're not in the room with someone they're trying to get a hold of, what gets through the hundreds of emails per day in your inbox and gets you to reply to somebody?
Well, first of all, I would say that surround yourself with people who have the domain expertise. If you're after the right type of deal flow and the best type of deal flow, either have the domain expertise yourself, because then the best opportunities will come to you, or surround yourself with the people who are the best in the industry that you want to get into. But if you want to, send a cold email, it is hard, but sometimes it works, but you really need to do your own homework at first, and you cannot, it's not always a numbers game. I think that you'll be better off maybe going after 10 or 20 people that you know exactly why you are approaching them, rather than 200 or 2,000 people.
Right. Yeah. Interesting. Okay. What would you say is the most valuable strategy you could share with either investors or capital raisers here in the room that would be worth a lot in terms of getting them more traction?
So for us, I would say that elaborating on your investment vehicles has been one of the best approaches. So for example, what we did is that we brought in a public market instrument in the form of warrants into early stage startup to allow for to maximize return on our investments. So if you have a lot of value to give in the beginning, you're at a great negotiation point, which is much harder to do later on. So I think that will be number one.
Right. Yeah. I think one thing that most people here have heard me say before is that I found that investors who can see deals, first exclusively are at a better valuation or at like a major advantage. And if you can add that strategic value because you have domain expertise as an investor, then people are just much more likely to want your capital versus someone else's, right? What's a costly mistake to avoid for investors in the room?
Don't trust anyone. No, but seriously, you speak to founders. Everyone's going to make X amount of revenue. You speak to a real estate broker. Whatever deal is going to be worth X, Y, and Z in 10 years' time. You have to do your own homework. That's just it. It sounds depressing and sad, but honestly, it's going to give you a lot of stress relief and a lot less headache. So I can give you a fun little backstory there, and which is why, so Richard, who is the man behind our office, he was a basketball player back in the days, and he still loves basketball. So I'm not sure how many times I've heard this story, but he was about to buy the Clippers way, way, way back in the day. So I think he was about to buy it for $2 million. And he was going to do this together with a business partner of his. So going in half-half. And Richard showed up, the seller showed up, but the one who didn't was the other business partner. So he couldn't go through with a deal. And I think I still hear about this, once a week or so. So it took another 35 years, honestly, before we ever made an investment together with another partner again. So lesson learned.
Yeah. Yesterday, both John Laterra, manages $1 billion, said that he just assumes everyone's lying when he talks to them in real estate. And then Larry Namer says in his book that to survive in Los Angeles, you have to assume everybody is lying until they prove to you otherwise. So it's come up 3 times now on stage from fireside chats. Yesterday, the other number one thing that came up that investors agreed with was to create a relationship before you pitch a deal. And it's not that you shouldn't pitch a deal. The point of an investor club is to make connections with investors and for investors to find deals. The point is that without the context, they don't really care about your deal because they don't know you yet and you don't know them yet or how to work together yet. And I think that can be heard the wrong way. But how does that work with your family office in terms of creating relationships first? How do you balance meeting a family office but showing them what you have so they actually want to reply to your email or get to know you, et cetera?
Well, for example, when we decided we're going to get into venture capital, we didn't really know where to start. And For us, we actually got introduced to a gentleman through our banking partner. So that was all serendipity, but what was not serendipity was the partnership that then came from that introduction, because it took over a year to establish that partnership and well over 20 meetings. But so it's just, interviewing and spending time with people who you think that you can do great business with, and then build up some kind of trust. But again, it's not going to be built over 24 hours. It takes time.
Right. Yeah, we had the pleasure of introducing Robert Cialdini recently, and I always emphasize that he's shown it's scientifically proven is 16 times as effective to meet in person. And if he has to build trust over like one Zoom call or one phone call, it's like almost impossible if you're investing any significant amount of money, right? So when you're vetting somebody and conducting due diligence, are there any kind of like litmus tests or things you do to see how they respond, or any specific things you do, or is it more just kind of a osmosis process where over time you learn to either trust them or not, and it's not like a super specific question or 4-step process you put them through?
No, I think it's the latter, where you're just, you're spending time, you're getting to know each other, and you also, trusting your gut is a big part of it all.
Right. Yeah, for sure. What unique strategies and exciting things are you focused on in the venture capital space? Is there some sub niche that you're most excited about that you want to source from here in the room?
The fun thing about this is I think it's a real 50-50 combination of real estate and venture capital that we are the most excited about right now, which is data centers. So we have a project right now which we believe that our family can make another $2 to $3 billion off from. So we are building out data centers with some of the best people in AI at the moment. So we're partnered up with a former department head from OpenAI. So we're building out data centers together with this gentleman and some of his team members up in Northern California. So we have a town there that's called Copper Valley that we bought from the Murdoch family back in 2018. And it just has a lot of land that we are now turning into a big data center hub, and we're starting with 50 acres. And so just to, most of you have probably heard about the Stargate project at this point, which is the project between OpenAI, Oracle, and SoftBank, where they're going to invest $500 billion into AI infrastructure over the next couple of years. And AI is everywhere today, but the facilities needed for this is not. But so what their project is actually only going to cover 20% of OpenAI's need. And I repeat that again, 20%, and it's $500 billion. So that speaks to how big the playing field is for the rest of us. And this just makes great sense for us to do this. And we have a huge lake up on our land as well. So we're building out a hydrogen plant.
Awesome. Yeah, that's exactly what I was talking about with the second order inevitability thinking in my opening talk. It was like it's inevitable if we go from 1% to 2% power usage for AI, and then it's going to go to 30 to 40% in the future. No matter what that timeline looks like, then eventually you're going to be positioned super well with that rising tide, right? Warren Buffett says that sometimes the direction of the tide matters more than the swimmer. Right? If you're swimming upstream, you're in trouble maybe, right? So what about on the real estate side? I know we have some real estate folks here. What if they also own a town and don't know what to do with it? Or what if they have solar or abilities in data centers or other real estate assets and they want to co-GP or work with you in a creative way? What are you open to, not open to? What are you looking for specifically?
I mean, we're always very, very open to first of all, building the relationship, and that's where we start. I think our family office has always all the doors open because we're curious, and we're always down to learn or to share and to learn about opportunities, and to now also include other investors in the opportunities that we're doing. I mean, right now with our with the data centers, that's a huge play. So we are obviously number one talking with the relationships that we have built for many years. And again, going back to like where do you get your deal flow from? That's something that you build over time. So we go back to number one, the relationships that we already have, and number two, we go to the leading investors or partners in the industry, because they also have the domain expertise. So those are the two things that I keep coming back to. But if anyone is interested in talking about your real estate projects or learning more about our data centers, I'll be here all day. I'm happy to connect.
Great. Awesome. And then what does a due diligence timeline look like for working with $1 billion plus family office? Is it 9 months on average? Is it 18 months or 3 years to get to know someone on average? I'm sure sometimes it's faster and slower, but what does that look like internally for you guys?
Definitely depending on the check. So we can do on the venture capital side, we can do a check in a week. Sometimes it's really, really quick, but then that's as little as $50,000. If it's larger, the larger the check, the longer the relationship.
Right. Makes a lot of sense. It used to be at events like this, when someone talked about venture capital, it meant something very specific. Nowadays, people don't want to go public and deal with all of that annoyance. And so venture capital sometimes includes like, oh, well, we're going to invest into SpaceX and secondary shares. We're going to invest in this other company that could have gone public, but doesn't want to, and they would have 20 years ago. So for you, how early will you start? Do you help seed ideas? Are you going into super late stage stuff that should have been public if it wasn't so burdensome these days?
We have in the past only been going super, super early. And then again, going back to what I was saying in the beginning, if you come in early, that's when you can be playful around your investment vehicle and kind of have a very, very good negotiation standpoint. So that's also the reason why our venture capital portfolio is looking to outperform our real estate portfolio in such a short period of time as well, because we did something that I haven't seen any other venture capitalists do before, is to bring in warrants in early stage startups. So that's just really working for us. But then again, you cannot expect to do this with just writing a check and expect that you can get any type of terms that you want. You need to be able to give a lot for that as well. So that's number. So we have been doing mostly in the very early stages. I would say that 9 out of 10 companies are at least in revenue. Now though, we are doing one-offs here and there. There are in slightly later stages as well.
Okay, great. And what do you think people would find surprising if they came to your offices, met with your team, saw the investment discussions you're having? What would they be really surprised by, you think, that maybe most people that you meet with just don't meet with family offices this big and aren't aware of how you operate or how you make decisions?
How much you can do with only 5 people around. We're a small team, but I think that is also like one of the benefits, that we can all be so involved in all the projects that we are doing. I think that would be what is most shocking.
Sure. Okay. And from the presentation I gave before this, I was talking about different mindsets, mental models. What else would you add to that presentation that is really key, to Richard's success and to the scaling of the family office and why you're successful now in this next stage? Is there any other mental models or strategies or ways you operate that should be in there as well?
Richard is now, he's in his 80s. Last week, I'm not sure how much time he spent on TikTok. So just always continue to be curious and interested and open to learning. But he used TikTok for research. And it's just like, it's fantastic, like how someone's mindset continues and to grow. And that's just like how I think that what defines a billionaire. And going back to the Clippers story, a couple of years ago, probably 2 or 3 years ago now, he came across an opportunity in the gaming space, and it's like esports. So what does Richard know about esports? absolutely nothing. But he sees a great opportunity when he comes across one. So like he knows what's happening in sports right now, what's happening with, audience and everything. And he's also comparing that with what's happening on the esports side, and where are the kids going today, and not just the kids, and what's that going to look like in a couple of years from now. So, funny enough, on the venture capital side, one of his favorite investments that we have done is this esports company, because he saw his chance again to buy the Clippers.
Right. Got it. Great. Yeah, it's interesting. That goes with like the passion idea we were talking about before. Like obviously enjoys what he's doing, doesn't have to work at all if he didn't want to, right? What's one last question that maybe I could have asked you that you'd like to share on about what you're up to, what you're most excited about? What else before we close it out?
Again, I would say the data centers. But other than that, what's really exciting is that our venture capital brand is really growing a lot, and we're actually opening up our first international offices. So our one and only office existing right now is down here in Santa Monica. But in a month from now, we are opening our first international office, which will be in Bangalore, India, because we believe a lot in the Indian market for early stage startup. And we are eventually also starting to franchise our VC model to different places around the world, which we are very excited about.
Right. When I went to India, I saw there was a ton of tech startups and tech talent there. Obviously, Singapore presents itself as kind of a Switzerland of Asia type capital hub. But you saw like much more strategic connections with the amount of programming talent and just startups in India and the size of that market. I guess India was a smarter choice for you guys. That,
and also looking where the economy is going, I think but also, where the money is. I think last year was like 60 new billionaires in India with a B. But then also like, it's just so many smart people there. Even looking at the companies, many of the companies that we're investing in that are based in the US, it's Indian founders. So it was just, we have done probably 40 investments in India. So it's not a new market to us. It was just it made a lot of sense to go there.
Right. Awesome. Yeah, that's one of the reasons why we're based out in Hawaii is that we're going to start doing events in Singapore and Sydney, but we just see so much new wealth being created in Asia. And when we went to London, every wealthy person you met had 15 bankers surrounding them. It was just so overbanked and lack of new wealth. And it was like not first generation entrepreneurial wealth. We're like, I don't think this is for us. Like go to Asia instead. So interesting. Great. Well, I appreciate you sharing your time here today. Let's give Isabel a big round of applause. Thank you.
Thank you so much.
If you are a founder, raising capital, developing real estate, or you're an investor, would love for you to get involved in the Family Office Club. I've run this community for 18 years now. We've hosted 300 live events. We have 17 million social media group members and followers. We have the #1 YouTube channel on family offices. We have the #1 most popular podcast on family offices. You can learn more about us and our membership options at familyoffices.com. We have 30 in-person events planned in 2026 and another dozen events this year. Please go to familyoffices.com to learn more.